but unfortunately, a lot of people focus on budgeting. They're focused on how do I cut back expenses, buy a few fewer Starbucks lattes or whatever the case is, so I have more at the end of the month to put towards investing. If you cut back on your expenses, you're being frugal, maybe cheap, but you're budgeting, and the hopes is that you're going to have more at the end of the month. The problem with that is you cannot save yourself to wealth. You cannot save enough. You cannot cut back enough to make a massive impact.
Right.
So what's the solution? It's not so much to cut back on expenses and reduce those. It's to increase your top line income, your revenue. So that means maybe a second job. Maybe it means starting a small business. Maybe starting a small business and making it into a big business. Whatever it may be, you want to increase the amount of revenue or income coming in and control your expenses in order to have more deployable, investable cash at the end of the month, at the end of the year. And that's how you're going to fast track your investing career.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. And today we have this great guest, Maro Santatrelli. Did I say that right, Maro?
You did. That's perfect. Santarelli.
Wow!
Yeah.
I got it right. Now, you guys know, my listeners, I would not have somebody on my show unless I felt like that they really were a great guest and they had information and something useful and viable for you. So Maro, I actually met him at a conference. We were setting up booths across from each other. Right? Is literally how we met. And he had this big display behind him, which you were actually quite good at putting up. Now, that isn't why I invited you on the show, because you can put up a display really well. I'm just saying. That's not why you're here. But then I realized you told me you were with Norada, and I'm like, oh my gosh, I actually know that company. I mean, the amount of stuff that you guys have done. So let me read. So how do you say the name of your company correctly? Did I totally slaughter it?
No, I don't think there's a formal way to say it. Norada, whatever works for you.
I'll call it Norada because it's rad, dude.
Rad, I love that.
Norada. Cool. Norada Real Estate Investing. Norada. Norada Real Estate Investing helps take the guesswork out of real estate investing by researching top real estate growth markets and structuring complete turnkey real estate investments. Complete turnkey real estate investments. We help you succeed by minimizing risk and maximizing profitability. So tell us a little bit about what you did before you were in real estate.
Before I was in real estate goes back a long ways because as the story goes, I bought my first rental when I turned 18 years old. I was one of the youngest investors that I still know to this day, because 18 is when you can qualify for financing, and that's when I bought my first rental.
Okay.
But long story short, Christina, I was always an entrepreneur. I always wanted to have a business or invest, because from a young age, I just wanted to be wealthy. I just knew that financial freedom was what you needed to be able to do what you wanted to do, when you wanted to do it, on your own terms, because it was all about time, not so much the money. Back then you thought, oh, I want to be rich, but it's not always about being rich. It's about being wealthy, because wealth is about time and rich is about just having a big pile of cash. So, nice. The answer to your question is that I've always been involved in some business venture. Granted, most of them failed, but I learned a lot. It was the university of real life.
Okay.
And so if you can succeed, great. If you can fail fast, fail forward, and learn from your mistakes, and then you carry that forward to your other ventures. And so, I had my hand in everything from technology to, print, you name it.
Had your hand in, what does that mean? You started small businesses, or you worked with small businesses, or, it just sounds like you've done a lot before you even got to real estate.
Well, before and after and during, actually, because real estate is not something you do one time and then you stop.
It's true.
You're always investing if you're building a portfolio, or you're managing it, or you're repurposing it and doing a 1031 exchange, whatever it may be. You're always involved in real estate to some degree. Ideally passively, not actively, but if you enjoy swinging hammers and hitting nails, great. That could be a hobby or a job for you. But I've been involved in a .com startup. I've been involved in some tech companies. I've been involved in print publications competing against the entertainment treasure chest coupon books that are out there. I started off in a grocery store, collecting carts and bagging groceries and stocking shelves. So I've just been all over the map.
Yeah, I started off as a receptionist for four Persian brothers in a textile company. Yep, that's how I started.
Somewhere.
Yep, we all started somewhere.
The question is, where are you going?
That's true. So what had you switched? So 18, let's get to the real estate part. So 18, you bought a piece of residential real estate. Why did you do that at 18? And how'd you know to do it?
So around the age of 13, 14, 15, and 16, I started reading books on investing, business, entrepreneurship, and real estate. And again, it goes back to a young age of just wanting to be financially free and knowing that I was an entrepreneur. So I was teaching myself before I could actually pull the trigger and do something, what real estate investing was all about, what business was all about. Then I knew that when I could turn 18, I could go and find a property. I would have some savings because of my job at a grocery store, be able to qualify for financing and get that first rental. And so that's what I did. I bought an end unit townhome in, what I would call today a B- type neighborhood. So it cash flowed well, and I fixed it up and put a sign out on the lawn. This was before the internet, so there was no, website to find a tenant.
No radpad.com or Zillow.
Right. None of those existed.
No.
So it was all manual labor, and it was like the school of hard knocks. You just had to do it. But I ended up leasing and managing that property and held it for a number of years. I ultimately sold it, which was a mistake in hindsight. But that was my first property, my first venture into it.
Wow. So what did you do? How'd you grow it from there? Because clearly there's a lot. I'm guessing you're not 19.
No, I wish.
I know I'm not 19. I know I left, 18, 19 a long time ago. So there's a lot of growth between having your first single family rental, which you clearly committed to really early on. And that drive for financial freedom was in you really young, which we're going to talk about. How'd you get from there to here? Now you run Norada Capital and you guys are Norada Real Estate and you guys do an amazing amount of work. I've been on your website. You guys are in multiple different cities. So that's a big difference or a big move from one to the other.
Yeah, the short answer is it was slow growth and then fast growth. And what I mean by that is I continue to what I'll call dabble in real estate over the years. I got my real estate license. I sold homes, dealt with, listings, buyers and sellers. But that's not really what I wanted to do. I got my real estate license because I was interested in real estate, but I continued to invest slowly. The turning point where, if you look at a graph and you call it the hockey stick moment where you go from, horizontal to vertical, happened in late 2003, early 2004, around the time when I started the business, the existing business here today. But in a 9-month period, I accumulated 84 doors. So that was a lot in 1 year. And that's really where I just put the pedal to the metal and it took off. But not everybody can do that. Not everybody wants to do that. It's just what I chose to do.
So what would you consider yourself to be an expert in?
I would consider myself to be an expert in investing in general, real estate investing more specifically, business and entrepreneurship, because I just love that space, if you will, the B quadrant, as Robert Kiyosaki calls it.
Okay.
I think that for those people who are interested to be a business owner and have the team and the talent for it, you can fast track your success in financial freedom. And the reason for that is because as an entrepreneur, you're taxed pretty heavily. As a solopreneur or a self-employed person, you're taxed even more. As a business owner, it opens up all kinds of tax advantages. And you have no cap or ceiling on the amount of income you can make. So if you can increase your top line revenue, minimize your taxes, you have more bottom line profit to put towards your investments, which for me would be investment real estate. So the more you can do that, and the faster you can do that, the faster you can build your portfolio, and the faster you can achieve financial independence and financial freedom.
Wow. Okay. That makes sense. And clearly that, I mean, it's just the hard driving, like you just drove right through the whole scenario all the way to the end and going, this is, you know, the faster you can build your financial freedom, because the faster you can build your bottom line by building your margin, by being able to use real estate to do that. So go ahead.
Well, I was going to say, you know, a lot of people seem to think, and this is not to beat up on Susie Orman or Dave Ramsey.
Okay.
But
go ahead.
Look, I like Dave Ramsey. I like a lot of what he says, but I don't agree with everything he has to say. But unfortunately, a lot of people focus on budgeting. You know, they're focused on how do I cut back expenses, buy a few fewer Starbucks lattes or whatever the case is, so I have more at the end of the month to put towards investing. You know, if you cut back on your expenses, you're being frugal, maybe cheap, but you're budgeting, and the hopes is that you're going to have more at the end of the month. The problem with that is you cannot save yourself to wealth. You cannot save enough. You cannot cut back enough to make a massive impact.
Right.
So what's the solution? It's not so much to cut back on expenses and reduce those. It's to increase your top line income, your revenue. So that means maybe a second job. Maybe it means starting a small business. Maybe starting a small business and making it into a big business. You know, whatever it may be, you want to increase the amount of revenue or income coming in and control your expenses in order to have more deployable, investable cash at the end of the month, at the end of the year. And that's how you're going to fast track your investing career.
When do you think you figured out that difference? The difference between, you know, the Susie Orman, where you save money and you cut back and you use your penny counting wisdom in order to save money, versus the driving it forward, having it faith, putting your energy and effort towards creating something bigger and larger that creates, like you said, that better overhead and creates more wealth to the bottom line. I mean, when did you figure out that which philosophy was for you and who you were going to be around that?
Well, it was years ago. I don't remember exactly when, but I mean, if you just sit back and think about it, it really just makes simple sense, because how much can you possibly cut out, unless you live a very, you know, lavish lifestyle? How much can you possibly cut back? Just, it's simple math. Just look, you know, if I cut back $200 a month from, you know, junk food and going out at restaurants and this and that, great, that's $200 a month. Maybe it's $500 a month, but what is that at the end of the year? And is that enough for a down payment towards a property?
Right.
You know, it's just simple math. It's just not enough. But what if you can bring in an extra 10, 20, 50,000 a year from a side business or a second job? Well, now that's one down payment towards a 3-bedroom single family rental in the Midwest or the Southeast every year, just from that. Well, do that for 5 years. Now you have 5 single family homes and you've just added to your portfolio. So it's not hard to figure out. It's just a lot of people, unfortunately, are given bad information or misinformation. And this is why I don't listen to Susie Orman or Dave Ramsey. I'd rather listen to Robert Kiyosaki.
Right. Right. And moving it forward. So, I mean, it sounds like as a teenager, I'm just going to stay on this track because we're already there. We kind of flipped the questions around a little bit, but it sounds like that you were on this track and focused on really wanting to have control over your financial freedom. Young. I mean, 13, 14, 15, reading books so that when you were 18, you were able to get a loan and be able to buy your first real estate investment. What did you think was the motivation behind that? I mean, that's pretty amazing that you dedicated yourself at such a young age. I don't think 13-year-olds generally figure that out.
No, that's true, unfortunately. I wish more people figured that out early on, but we don't have an environment to do that. Most parents are not financially successful to teach their kids how to do the same. And we certainly don't get it from our school system. You know, it's rare that we get that in public schools or even private schools for that matter. I was just, I guess, fortunate enough to be open-minded and have my eyes open at an early age to and have the interest for entrepreneurship and investing to pursue it. But I had a point that I wanted to make a second ago.
About 13-year-olds. Yeah, go ahead.
Yeah. So, you know, when it comes to, you mentioned the word control. At the end of the day, your financial future is determined by somebody. And that's either going to be you or you're going to put it into someone else's hands. and you're going to hope and pray that they know what they're doing and they make the right decisions on your behalf. And unfortunately, the majority of the population puts that in other people's hands.
They do.
So and then there's nothing wrong with that if they know what they're doing and you trust them, but you should know what they're doing and educate yourself so you have the knowledge to ask the right questions. Otherwise, you're just letting someone blindly lead you somewhere in the hopes that they get you to where you get to. Otherwise, it's like Alice in Wonderland, when Alice asked the Cheshire Cat, for directions, and the Cheshire Cat basically said, well, where would you like to go? And she said, I'm not exactly sure. And the Cheshire Cat says, well, then any direction will get you there.
That's right.
So.
It's in my course, in my mastermind course, but also with my consulting clients, like one of the concepts, and even when I speak, one of the concepts I try to really hammer home is the difference between finances and financial leadership. Like, are you going to choose to be a financial leader in your world? Like, the way I describe it is you wrap your arms around all of your finances, everything that you own, everything, your car, your choice to be a renter, your home if you have one, your rental if you have one, your student loans, whatever it is, you wrap your arms around everything you have financially, and you make a choice around each and every one of those about whether they're serving you, whether you're going to keep them, whether you're going to get a return from them, the return that you want. Now, whether that return is a physical return, like rent, or whether that return is a lifestyle return, like, gee, I can drive from here to my work and not take the bus, right? And the financial leadership is about choosing to be the one that is in charge of your financial choices, even if you're choosing to trust somebody else. Like, I'm going to take this 100,000 or this 10,000, and I'm going to give it over to the bank. It's like, are they really going to give me what I want? And that you have the choice, whether you have money or not, to step into financial leadership. You don't need $100,000 in the bank to be a financial leader in your world. You can become a financial leader being $10,000, $20,000 into debt and choosing to move yourself forward out of that debt through getting a second job and paying it off, through buying less coffee and moving in this direction. That is financial leadership, but it's a commitment that I find that people don't often make. They kind of go, oh, well, this is what I get paid and this is what the rent seemed to be. So I found the cheapest place I could. And they kind of don't step into ownership that they have a choice in the power of their own living and in the power of their own finances. And it sounds like you worked that out at like 13. Just saying.
Well, maybe not exactly at 13, but I knew at 13, I just knew at a very young age that I didn't know how I was going to get there. I just knew that I wanted to be what I would call rich at the time, but in hindsight, really, I wanted to be wealthy. And that's really, that just means that you have enough income coming in on a regular basis, passively, that you can sustain yourself. You can cover all your expenses and then have whatever more to do what you want when you want. And when you have that base, that foundation, you're financially free. Well, you're actually financially independent. I separate the two. Financial freedom is beyond financial independence. Independence means you've got your living expenses covered. You're independent. You're not relying on having to work for it. But financial freedom is when you have the excess to do whatever you want. If you want to go travel or buy yourself a Ferrari, whatever it may be.
So let's double back for a minute. So you have created a company that seems to be an expert in something. I will let you describe the something rather than me describe it badly. So describe your company and what you're an expert in.
Yeah, so basically our company is a nationwide provider of turnkey real estate investments. And these are typically single family homes, duplexes, fourplexes. We like to say that we provide investors or people, you don't have to be an investor right away, but we provide people with the knowledge, the resources, and the properties to invest. I'm not a big fan of the one-stop shop phrase, but essentially we are a one-stop shop for people who want to invest in real estate and build a real estate portfolio. It is about cash flow. It is about equity growth to create wealth. But we've got everything from the properties to the financing to the property management to et cetera, et cetera, et cetera. It's all within our network under our roof.
Okay. And I can see it here. I'm showing, for those of you guys who are listening, you don't know that I'm now showing your website, Marco's website, and specifically talking about, well, what is it that you guys have? And, you know, there's samples of properties right here on your website that are available with Analyze This and request information. And I mean, how did you manage to create this, and why create this particular model? I mean, clearly you guys are an expert in finding cities that you feel like are going to bring value and then finding properties in those cities. But why this model?
Well, believe it or not, this kind of happened accidentally.
I believe it.
I decided to get back into real estate, but real estate investing full time in 2003, late 2003. And I had gone to one of those free 3-day weekend seminars where you have 2,000 people in a massive ballroom, and they're all selling, you know, these boot camps for $15,000, $25,000, $35,000. And, you know, I had time on my hands. So I decided to do the same thing. So I whipped out my credit card like everybody else, and I was signing up and traveling the country, going to different cities and taking this education, much of which I already knew just because I was self-educating myself prior to that.
Clearly.
But that was around the time when I, in a 9-month period, acquired 84 doors in different markets on the other side of the country. Me being in California, I was investing 2,000 miles away. Many of those properties were sight unseen, made my fair share of mistakes. But investors were coming to me as I was going to these different events in these different cities and networking. Investors kept coming to me saying, hey, Marco, I see what you're doing. You're buying a lot of property. You seem to have figured this out, even though we're all going through the same education. And they're saying, hey, can you help me? Can you coach me or mentor me or help me in some way? And my answer was, I'd love to help you, but I don't have the time. I'm you know, full-time and a half as it is. I just don't have the time to be a mentor or coach. But I see a lot of deal flow because that's what I'm spending a lot of my time on. So I can provide you properties that I've kind of pre-vetted, if you will. And they said, sure. And so that's really how the business was born. It was like people were looking for help on how to pull the trigger and start acquiring properties, knowing what market to be in, what neighborhood to be in, what to look at and analyze on the property. I was already doing that. So now I'm doing it for other people, and I'm able to make a profit in doing that. So it's a win for them and a win for us.
What is it you think that makes your company so very good at it? I mean, why is this, you know, you guys clearly have nailed this niche. What is it that you think allows you to be in such multiple markets and actually continue to nail it so well?
Well, it's a couple of things. I would say it's understanding the markets, being able to choose markets, knowing that if a market is growing or declining, if there's population growth or decline, job growth or decline, if the numbers make sense, if there's the inventory, if there's the right team of people, because real estate is a team sport. It's not an individual sport. You know, you have to have a team around you. And if you don't have the right people, it's going to be a problem. Either you can't do anything, or you're going to be able to do things, but it's going to be costly and you're going to make a ton of mistakes.
Yeah, ton of mistakes.
So all that is a big part of it. But doing the analysis and due diligence is another part of it. Having the relationships over the years of having the people that you know and trust, that you've done a lot of business with, that we can take investors who come to us and we can feel good about introducing them to the people that we work with. So that now they have the lending, now they have the properties, now they have the property management and the asset protection and everything else that's needed by these people to become successful real estate investors. Well, we already have that under our roof. We have that in our network, but that took years to build up. So now that we have the processes and systems and the whole framework to allow people to piggyback on that system and do what I did long ago and not step on the landmines, not make the same mistakes, is really what we're passing along. And we don't even charge for all that value, all those resources. There's no cost to an investor coming to us for that help. We even have free, you know, counselors and strategy sessions. So the thing is, we're just giving back and trying to help 1 million people become financially free.
And so it's amazing. So it sounds like you either find teams or create teams in the multiple cities that you're in. I was showing them earlier, right? The multiple cities that you're in and the multiple properties you have in those cities. So you either find teams or create teams in those cities. How many times do you feel like it's, you're actually creating it from the ground up, or how many times is it just a good synergy? I mean, it's amazing to me the size of the company that you run and the fact that your hair isn't gray. I'm just saying, like, how do you do that? How do you manage all that?
That's a damn good question. I'm not sure I know the answer to. You know what? I have a good team. I have a great team, and that helps a lot. Everybody knows their role, whether it's transaction coordination or working and educating investors or whatever the case is. But it's not like we change the markets a lot every year. We have the perennial markets that we have year after year after year, like Houston and Memphis and Jacksonville and Indianapolis. I mean, those are perennial markets. They don't change a whole hell of a lot. When they don't make sense anymore, guess what? We move on to another market. We don't offer it anymore. But as long as the market makes sense, the inventory is there, the numbers make sense, the team of people that we work with are still providing us that inventory, new construction or whatever it may be, then all the pieces of the puzzle come together and things work. Okay. But we probably introduce about one new market a year or two, and sometimes we'll drop a market or two a year. So it averages about 20 markets right now. But hey, I started off with one market, then two, and then three. And then it was six for a long time. I focused on 3 cash flow markets and 3 growth markets.
Okay.
But because since about 2012, when we started to see all the markets like grow and become sellers markets again, the interest was really increasing in real estate. We started to see inventory levels decline. Like it was becoming more and more of a seller's market. We saw less inventory available. And because of that, it forced us to go wide into more markets because we didn't have the depth of inventory in all the markets. So we had to introduce more markets to have more inventory available to the people that we're working with, our investor clients. And that's the reason why we're in about 20 different markets, on and off, but roughly 20 markets.
Wow. So what do people need to know about your company? Is there anything in particular, any tip or trick or anything in particular that you feel like that you want to share that's either about your company or about your area?
Well, that is a 1-hour conversation all by itself.
Didn't mean to do that one. All right.
Yeah, I'm going to give you 2.
Give me 2. Go for it.
I'm going to give you 2.
Because I still have one more question after that. So we're not done with the show just yet. So
no, I know. But I mean, when you talk about tips and tricks, there really isn't a lot of tricks. But there are a lot of tips.
Okay.
The first thing I want to say, and this is a mistake that a lot of investors make early on, is they feel or believe or are told by the quote unquote gurus that they should invest within a 1 or 2 hour driving radius of where they live.
Right.
Well, if you're in the right market at the right time, yeah, that makes tons of sense.
Sure.
But for a lot of people, especially if you're in a very expensive market or a market that's highly competitive and there's not a lot of inventory, i.e. coastal California, then you're going to have a hard time finding a deal. And if you do find a deal, often the numbers don't make sense, and you're probably going to be spending a lot of money in terms of down payment capital for that property. Yeah. And you have the added risk of more downside risk than upside potential. So the point or the trick or the tip is take a top-down approach. And that means start with the market, the right market that makes sense. We have over 400 markets in the US, if you talk about major metropolitan statistical areas. Start there and then work your way down like a funnel to the neighborhoods and then the properties and the team. So take a top-down approach and don't be married to your market. I call it being market agnostic.
Right.
So that's tip number 1. Do you want another one?
Yeah, I do. I want another one.
Okay. So the neighborhood is the key. The market is very important, no question about it. But every metropolitan area has great neighborhoods, bad neighborhoods, war zones, and everything in between in that spectrum. It's finding the right balance. It's knowing that you are in a neighborhood that has a large tenant pool to draw from, has stability, the numbers make sense, and you know that your capital is going to be well preserved and protected in that area, and that you will always have a flow of tenants because there's rental demand. In other words, we call it a desirable neighborhood.
Right.
typically we're going to call those B plus, maybe A minus neighborhoods. That's kind of the middle of the bell curve, the sweet spot. So neighborhood is key. It doesn't make sense to be in a premium high-end A class neighborhood, and it doesn't make sense to be in a C or D class war zone type of area.
Don't want to be in the war zones. Nope.
Yeah, you want to be where you would feel comfortable walking at night, that the schools don't have to be the greatest. It doesn't have to have zero crime, but it needs to be a desirable area where the numbers make sense. So those are two things that if you did that, you'd probably cover 70% of your, you would assure 70% of your success rate.
Okay. Talking about success rate, let's move on to this question. What was your hardest moment in investing, and how did you solve it? Clearly you solved it. You're still in real estate. So what's your hardest moment in investing, and how did you solve that?
Wow. My hardest moment, there's a number of them, but I'll just throw one or two at you real quick.
That's good. And it's good to hear there's a number of them, because when you've been investing as long as we have, there is a number of them. So go ahead.
Long ago, early on, I didn't know any different, but I was working closely with my real estate agent, who doubled as my property manager. And I trusted her at the time. She was doing good work for me in terms of finding properties and negotiating them. But the mistake I made is I allowed her to be my property manager as well. And she was managing a bunch of units, a bunch of properties for me. Where that fell apart is that she was a one-man show, and her focus wasn't always on real estate sales, nor was it always on property management. So she wasn't doing anything 100%. And, being a one-man show, or one-woman show, actually, she was a woman, I really suffered. My business suffered in every area. And then the straw that broke the camel's back is, at one point she had collected $6,000 in rents, all cash and money orders. And she was normally sending them to me, in a UPS envelope every month after collections. But this one month I never got my $6,000 of collected rents. And that was a big problem. She claims to have dropped it off at the UPS store, and there was no proof of that. So I couldn't really blame her or accuse her of theft. But at the end of the day, as time went on, I started to put the pieces of the puzzle together, and I realized, you know what, she's ripping me off. So the lesson learned from that is that if you're going to, and this is true to this day, and this is what we tell clients all the time, always use a full service professional property management company that really can do everything from soup to nuts for you, and that has a good reputation. Don't rely on one individual, and make sure that that's all they specialize in is management, or whatever the trade is that you're looking for. So that's a big one.
So it sounds like you solved it. The hardest moment was being willing to see the truth about somebody you trusted, and lost some cash along the way. Sounds like you solved it by firing her, I assume, and hiring somebody else. How did it help you grow up? You could have just gone, oh yeah. I'll give you an example. I was at a real estate meeting, and I was listening to this woman who said, I have a horrible property manager. I have 3 buildings in blank, blank, blank neighborhood, and she's a horrible property manager. And I'm like, okay, so fire her. And this woman's like, but I can't. I'm like, why not? She's like, then I have to find a new one. And it's like, wait a minute, right?
Yeah, the answer to that is simple. This is how you grow up, and this is how you grow up fast.
Tell me.
You treat your investing like a business, because it is. Don't treat it as a hobby. Don't treat it as a pastime. Don't treat it as something that you think you have to do. Treat it like a business, because it's all about income and expenses. It's numbers. It's making logical, rational decisions, not emotional decisions. It's a damn business, and treat it that way.
Okay. Can you remember a time, maybe a place, where that lesson hit home so deeply that it changed maybe almost, your mindset from there forward?
Yeah, I'd say at some point in time, you need to make, this really piggybacks on what I just said. You need to make a decision to move forward, and move forward without reservation, and just burn the bridge, you know, or burn the ships and let them sink, so you have no way to go back. Because if you're going to make a commitment and move forward, and do it with, you know, your full commitment, gusto, all your energy, and do anything and everything you have to do to make it successful. One of my coaches, I mean, it's always good to have a coach. One of my coaches just released a book. He said it's called there's no plan B for your A game. So have your A game, go, you know, all the way. Like, just, I don't want to say the words he uses because it wouldn't be appropriate on your show.
Okay, we'll just say blank, blank, something, something.
Yeah. just make a decision, have a plan, work the plan, and don't look back. There is no plan B.
So you just said it's one of your mentors. So it sounds like you actually intentionally cultivate, through using mentors, your mindset and your drive.
Yeah,
am I guessing?
I think I have 3 coaches right now. And I'm in like 5 mastermind groups. So
wow.
I am a big believer in personal development and personal growth and education and working on yourself and working on your business. Because look, if you want massive results, you have to take massive action.
Right.
That's all there is to it.
Okay. And so it sounds like you're committed to moving yourself forward through having the support network, not just a highly successful company, but also being able to support yourself on keeping yourself driven, pointed, and on purpose.
Yeah. And for, you know, for the people listening to this and saying, well, hey, I work a full-time job. I have a family, I have careers. You know, I have my hobbies, and right. I have my friends on the weekend. I don't have time to be in a mastermind group. I don't have time to hire a coach and be involved in all this. That's okay. You know what? Here's your solution. At the very least, spend $10, $15, $20 a week, even if it's a month, but $15 a week, buy yourself a great book on investing or personal development or you know, mindset, you know, a Tony Robbins book, whatever it is, something that is nonfiction that's going to help you move the needle and grow as a person, and read a chapter a day. If you can read a chapter in 45 minutes, guess what? After the kids go to bed, sit down and read the damn book. Read 45 minutes. Or guess what? If you commute back and forth to work, there's no excuse not to listen to an audio book in the car. You should be able to finish a book a week. The average audio book is about 8 to 9 hours. So if you're driving, you know, an hour to or so a day, guess what? You'll have the book done by the end of the week.
I love that. No excuses. That's perfect. No excuses. That's a perfect statement. So thank you, Marco. I so appreciate you being on my show. So how can people get a hold of you and find you and your website and your contact information and anything that you have for them to help them move forward and have no excuses?
Well, Christina, first of all, thank you for having me on the show. You're a great host, and I really appreciate sharing whatever I could share with your audience.
Sweet of you.
I could talk for hours. This went by really fast.
I know.
Did it? I felt that way.
Yeah, it did. It just flowed right through. It was really great. And we ended up jumping around too. I mean, we had the questions, but we jumped around from one to the other, and, you know,
it's okay.
Financial freedom to what do you do to, you know, what hardest moment in real estate to, you know, make no excuses and move yourself forward. Use your coaches and your time to, like you said, go ahead. Yeah.
It's more about what you take away from this episode and what you put into action than you know, the structure or the flow. But to answer your question, really, there's a lot of content and resources on our 2 websites. Our main website is the one you'd shown before, noradarealestate.com. That's kind of the mothership, if you will. The sister website is named after the podcast and the upcoming book. It's called passiverealestateinvesting.com. So just go there, passiverealestateinvesting.com. And there is not only the podcast, but is our ultimate guide to passive real estate investing, which is a fantastic primer for anybody, regardless of your level of experience. And here's kind of a unannounced, kind of free bonus, if you will. April 1st is our target date to release the upcoming book called Passive Real Estate Investing. It is coming out in April, and I intend to give it away for free. So anybody who signs up on the website or downloads the current guide, the PDF version of that, will be entitled to download the full-fledged, whatever, 300-page book when it's released. So that's a freebie.
That's a great. And I mean, I'm showing your website, as you can see, the passiverealestateinvesting.com website, and you can see it's full of information and podcasts. There's the book, and here is podcast 209. Ask Marco, podcast 209, I assume. I'm seeing all these numbers, 202, 197. So there is a huge plethora and backlog of information and wealth that people can use if they want to know more about not just you, but basically investing in real estate and being successful in it. So I so appreciate you being on the show, Marco. Thank you so very, very much. It's been great having you. I really enjoyed it when I met you and we're setting up our two booths across from each other. And we're like, who are you? Who are you? Like, why are we here? Like, what is this about? Oh, do you know these people? Oh, how long have you know? And it was very fun. And I've run into you in multiple different situations, and you presented at Phoebe Pasadena, which is why you're here on my show, Real Estate Breakthrough. Loved having you there and presenting and sharing your knowledge and being a giver in the field. So really wonderful having you here. Thank you so much for listening to the Real Estate Breakthrough Show. I'm Christina Suter, your host and producer of the show, and I look forward to hearing you airing next week. Bye.